Assalamu alaikum everyone. Welcome to today's Bitcoin update for 23 of February, Wednesday. And please join me in the Discord. And yesterday we talked about that maybe that Green Party is over. And I released the second part video of a candlestick called ladder bottom bullish candlestick basically. And that seems to have already played out. So guys, it's time to be really extra careful right now because we are trying to put an evening star on the 4 hour time frame by the time I'm recording this Bitcoin update. So this is an evening star and this is a reversal pattern to the downside. Now I really want to actually clear the charts, guys, and I want to talk about Bitcoin in detail. I want to talk about the news about Ukraine coming into the play as well, and what it can mean to the world, and is it going to affect cryptocurrencies potentially? Potentially, I do have a feeling we're going to drop. Okay, not a logical explanation here, but just a sentimentic analysis where you just have to use your logic and brain. There is a feeling coming to me that there could be a drop stepping in and we could dump. Yes, that war can affect cryptocurrency as well. And there is no doubt that if I go into the BLX right here, we saw this war happening before and it affected cryptocurrency all in all, and that was when we had this coronavirus dump. Okay, so when the coronavirus actually came in, the market was good, and then it started to dump, and then we had some big bear flag forming up from there, and then boom, you crashed to the downside completely. And one thing I'm gonna tell you guys is that this dump that you actually see, it took 1 day and you just went all the way to the like 50% in one freaking day. 50% drop. Okay, so that's coronavirus dump right there, and this world news actually does affect crypto. I'm not a good fundamentalist, I don't do news, I read the charts, but yes, you must even combine the news and the fundamentals. I wish I was good at fundamentals, but anyway, here I am. At least I'm trying to talk about the fundamentals as well. Now let's jump back into the Bitcoin, chart right here, and I've cleared everything, and I want to reanalyze all the single thing that we can possibly talk about. So Russia versus Ukraine, but the people who are being affected are the members who are trading crypto or stock markets or any other exchange. Right now, it shouldn't be a surprise that we are dropping down. It shouldn't be a surprise. Everything is going down, by the way. We've been overextended in this bull run. We're looking to go down. Can we go down to the bear market? Who knows? We could go down to the bear market. You cannot ignore the fact that on the monthly you have a very big whopping double top right there. Okay, we could even go for the bear market. Who knows? But there are so many things I want to talk about in this video that's so important. So this first top, second top, and I pointed out this long time ago. Yes, you haven't broken the neckline. If you start to come and break the neckline, you close below this neckline, then boom. In my opinion, you're really gonna dump way more down, and that's the bear market scenario. Because let's go back into the BLX. When the last time did you go for the bears? Well, here we are. You made one huge descending triangle. You're making one huge double top. This one comes after a long rally to the upside, and this one came after a long rally to the upside. But we never really actually reached the peak of the mountain, which could have been $200,000. That was what I was looking for a very long time, and it does make sense. But anyway, let's go back to the Bitcoin chart right there. Now that's the first double top that we want to talk about. Another thing is, I talked about the 20, so let's dive again back to the BLX. So here we are with the 55 and the 20 EMA, and look at this. We still have 5 more days left to close February. So in the next 5 days, if you actually start to close and you start to open the new month below the 20 EMA, you're gonna go down. But there's one more thing that I want to point out. Okay, so I do remember that previously I talked about in yesterday's video. Let me go back to the Bitcoin chart. And on the 4 hour time frame, what did I tell you guys yesterday? That there is going to be a little bit of a relief, but I think that relief is over. And yes, candlesticks do work. So yesterday when I posted out that video, the market was a little bit down to the 37,400, and then you went all the way to the 38,373. But it's not gonna go. I don't think it's gonna go to the 39Ks anytime soon, because the way this candlestick is now printing out, that's bearish. It seems like the continuation of the downtrend is about to happen and potentially fall down to the $35,000. But I'm gonna be telling you, be very careful. You don't know if you're gonna go and start to lose $29,000. There are many reasons why I'm saying this. I'm gonna tell you why. Now, the reason why I went into the 4 hour time frame, I'm going to tell you. The first candle, second candle, third candle, these are known as three black crows. Okay, so you have the three black crows and you had an inverted hammer, and now you have this big bullish candle right there. And then from there we did go a little bit up, and now you're looking to actually go down once again. So this has played out. And this is on the shorter time frame. It doesn't mean you're going to start a bull run. No, it did play out just with 2 or 3 bars right here. These 3 bars actually played out, and they serve justice to this continuation pattern. But the problem is that now what you're forming here is almost a bearish engulfing candlestick, and where you just formed, the level you formed in is a very nasty place to be in, because if you look at the 4 hour time frame, guys, you're putting in a big resistance level right there. That's your resistance, guys. So this resistance, I previously talked about this resistance as well, and it so far has been restricting the prices. The last time you saw this green candle to the 39K touch the resistance, look what happened. Again, you're doing the same. Look what's happening. You're touching the resistance, you're being resisted, you're looking to go down, and it's almost like you're forming a broadening descending wedge, which is kind of a bullish pattern. I'm going to show you. This is a broadening descending wedge. So the prices are forming like this, and they're expanding, they're broadening. Okay, so this is actually bullish. If you break out of it, you're going to go back to $41,000. Now let's go to Google, and if you don't know about broadening descending wedge, let's do a quick Google right now. Broadening descending wedge right there. But remember, this thing doesn't mean that they're gonna be successfully playing out. So this is just how they look like. The prices go wider and wider to the downside in a wedge, and this is a kind of a bullish pattern, and this is how they look like, right? So this is what I want to show you. What you see right here is the same thing that I just draw right there. So what is this? That's actually a bullish pattern. So it means that if you're gonna go down, you're gonna find support nearly these levels, like the 34, who knows, the 33K, and then bounce off here and then go to the 36 and then continue. It could be an extended one. It could be extended like this as well. So that's the potential play, and this is what I'm actually looking forward to. So I'm actually going to leave the charts like this, and let's see if I can be right anyway. So you went up. I'm looking for this one to come down, bounce off the 34,600, and potentially move again to the 36K, come down to the 32, and then consolidate until you don't break out of it and go back to $41,000. That's the potential play, right? So boom, 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 something like that, right? So I'm gonna leave the descending broadening wedge like this one. That's the first clue. And if you see the images, of course, this is a bullish pattern. So anytime you're gonna break out of it, you're gonna go back to where you formed the wedge. Now that is out of the way. Number 2 thing that I want to point out as well is I'm gonna go into the daily, and again I'm gonna clear the charts. I'm gonna draw it back. But now, if you go to the bottom of your screen, bottom right, you have the log scale turned on. So let's turn on the log scale and let's talk about this one. As a matter of fact, what I'm going to do is I'm going to go into a line chart, and then from this line chart, I want to draw this particular resistance of Bitcoin previously right there. And what are we doing? Doesn't it look like a breakout in the retest? You might make the fact that it's a breakout in the retest. Okay, so you are restricted in this line, boom, and look, it's a very clear breakout, and you're just back testing this trend line. Isn't that bullish in itself? Yes, it is, but there's a problem about it. Let me actually shift into the candles. There is a big problem about this move. But what is the problem? Now, this is the log scale turned on. If you turn off the log scale, it's going to give you a very, very different picture. And I think it's better to turn off the log scale a little bit, because we're analyzing the daily, not the monthly time frame. The log scale is good actually when it comes to the monthly time frames. If you want to look for Bitcoin information in the past 11 years or 10 years, but when it comes to the smaller time frame like the daily, the 4 hour time frame, it's good to turn off the log scale. So if I readjust this trend line, look, we still haven't retested this trend line, right? So we haven't retested it. It's important to keep both things in mind. I'm not saying ignore the log scale, and I'm not saying you're also not going to ignore this one, but to me, I'm gonna tell you why this dump is actually way more sensible to go to the downside in a minute. But if it does come down, it seems like when the log scale is turned off, then it makes sense for Bitcoin to even come nearly 28,000 or potentially even go to the lower 26Ks and the 24K, and that's where you touch this trend line and then you pump out of that place, right? With the log scale turned off. And why do I say that there's a possibility to actually move to the downside? Now, let's remove that trend line and let's talk about this one as well. Here we are. Now, there are 4 more days to close this weekly candlestick, and it seems like you did already made an evening star. That's a bearish candle, and you're looking to continue. On the monthly, we have 3 black crows, and remember about the 3 black crows, okay? So in the next 4 days, I really want to see what this candlestick does and where it goes. If you do start to continue to go downside to the 35K, in my opinion, you're gonna continue to go to the downside even in the next coming weeks as well. Yes, even in the next month, you're gonna continue with the downtrend, right? And turning on the EMAs, look, you are below the 55 and you close below the 55 for the first time. Now let me tell you one very simple formula. Whenever you're below the 55, you really go for the bear market. I'm gonna be honest with you. I'm not gonna actually put you out with the bulls and the bears or anything. I'm just telling you what I saw in the history back a long time ago. If I actually want to give you proof, whenever you're below this blue line, you really did go for a bear market. You didn't recover anytime soon. In here, you didn't go below the blue line, and that's why you went up. But now you went actually below the blue line, and that's not a good thing. Whenever you did this, you went for the bear market. Now let me actually study this one with you. Let's go to the log scale once again, and I just want to zoom in into these candlesticks. All right, so here we are, and let's talk about this. I'm gonna remove that drawing right there. Yeah, so you were going for the bull run like this one. Look, an extended bull run right there, and then once you hit the top, you came down and you made a cross and you went below the 55. Look, once you came to the 55, you bounced off the 55, you went under the 55, and that's where a lot of problem happened. Okay, again, you went for the bull run, you didn't lose the 55, you didn't lose the 20, and as soon as you actually went below the 55 here, went below the 55, boom, you went below it, and then boom, you had big dump to the downside. Okay, in here again, you went below the 55, but this was a black swan event, and then you went to the upside, so I'm not going to count that really that much. But look at this now, look at it again, the history. So tell me, why am I going to put you in any blue and tell you that it's not going to go down? It can go down. There's a war going on, there's a lot of things going on, and I'm not even trying to spread FUD or anything. It's just my own research and what I think and what I'm saying, and it's just my own personal opinion, and not necessarily it's going to happen like this, but I'm just analyzing the market because the market is interesting nowadays. And there's one more thing also to talk about it, so let's go into the daily time frame. And you know, there's a shadiness about Bitcoin because there's something that really bothered me, and I talked about the head and shoulder a couple of videos ago. This was your left shoulder, your head, your right shoulder, and I'm going to show you the neckline. So here we are with the neckline, guys. That was your neckline, and from where you actually broke out, you take the top to the bottom, and this is where you broke out of. This is your technical target, 29,756. You never went to that technical target. Simple put, it's a simple logic, it's a simple chart. It's out there on the chart. I'm not even putting my hands on it. All right. So yes, you're still in a downtrend, you're still below the neckline. You never really even crossed the neckline to backtest and continue, so you're not invalidating this head and shoulder. It is there, the journey is there, up, down, potentially again up, down, and then potentially come down by April, who knows. And then from here, can you go down? We don't know. One more thing, I'm going to turn off the log scale, And again, we're going to remeasure and recalculate this head and shoulder once again. So this is your left shoulder, and just like that. So you take the top to the bottom, and this is where you broke out. By the way, this takes you all the way down to 20,000 or 21,272. Simple put, here's something that you're gonna be fearful about. 21,272. It's on the charts. It's a head and shoulder clear one, and that's the technical target is looking to take you down. And it's not gonna go straight down like this. It is doing everything. It is still technically in a downtrend. Look, if I turn on the EMAs, you're still under the EMAs. You're under the 55 EMA, guys. At this point of time, it's because many people, retail investors, have already invested in Bitcoin, and we now think that it's not going to dump, but that's when it actually dumps, and that's when the market is becoming very, very fearful. And in July 2011, Bitcoin actually dumped by 99%, but still it recovered. It always recovered. It really, really shakes off people, people fearful, and then when they are fearful, this thing moves to the upside. Now, this is number one clue. Number two, the altcoins have down targets pending. Ethereum, for example, now has not met the technical target. So this was your double top from the top to the bottom right there. This is where you broke out of it. You're still looking to go to the 2468. You didn't actually complete that. Let's go to the sandbox. Okay, let me open up sand to USDT, and on the 4-hour time frame, we do have this head and shoulders, and that head and shoulder target is still taking you to the 2.3 and the 2.6643 when the log scale is turned on. So yes, you're still looking to go down. You are still being resisted with this price point. Look at that. That's a resistance level right there, and it's making another descending broadening wedge. Let's talk about Solana as well. Okay, they do have a head and shoulder, and this is what I was talking about. This was your left shoulder, your head, and your right shoulder right there. So what's the technical target of it? You broke out of here from the top to the bottom right there. This is where you broke out of it. It's taking you to the $69. You haven't met the technical target. You're still in a downtrend technically to go to that place. Bitcoin has already so many targets that I've just shown you. It has so many negative consequences at this point of time. It's really hard for it to recover to the upside. So anyways, this was a very, very long update for it. We're going to see what the world is going to do. This is your resistance line once again, and I'm really, really starting to think that this is a descending broadening wedge, but it might not play out. Even previously we had one, it did not play out, but I'm still going to live it because we cannot ignore it. And the next thing that I'm going to talk about was, where did I see the descending broadening wedge? Just a minute here. Yes, one was here, it didn't play out, and look what happened. So boom, this was just like that, and then one was just like this one. And during this time, guys, what happened is that you actually broke to the downside. You didn't broke to the upside. So same thing can happen again. Remember, you can still come near this line and lose the line completely and then go to the downside. So it's only a matter of actually going to the trend line, holding the trend line, back testing the trend line, and moving. Otherwise, you will lose the trend line. Boom, you're going down. Just like I showed you right above during the previous history, right over there in here in this place. This same scenario can happen. Okay, you can invalidate bullish patterns when you're really, really bearish, and the sellers are stepping in. So that's it for today's update. I'm gonna see you in the next one. Allah Hafiz.